Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. We're 1 day away from the US presidential election, with polls indicating a tight finish between Donald Trump and Kamala Harris. The dollar slips while US stock futures rise. Oil rises after OPEC Plus members agree to delay a production hike amid concerns about fragile demand. Meanwhile, Iran threatens action against Israel. Plus, Ryanair cuts its 2026 passenger goals due to delays from Boeing, its only aircraft supplier.
In the meantime, a quick check on these markets here. When you look at the futures picture, seeing slight outperformance on Eurostoxx 50 futures, higher by 0.2%. The FTSE 100 is the underperformer, but of course we are counting down to the U.S. election. All of that showing up in the currency market. Dollar weakness across the board, spurring some of the bets into things like the Chinese currency. Of course, offshore yuan getting a little bit of a bid this morning. Brent crude also catching a bid off of developments in the Middle East. We're going to dive into that 74 handle on Brent crude. The countdown to the opening trade starts right now.
Good morning. Monday, the 4th, election eve. We are waiting for the United States. The world is holding its breath. In just over 24 hours' time, Americans will start in-person voting. When we will get the results remains an open question. It's going to be an interesting week, Kriti.
It really is, and I think this is going to be such not only tight finish as Anna was talking about, but it's also going to be this idea that it paves a little bit of a volatile period for about 6 weeks after that, regardless of who wins. That feels like the scary aspect. In the last 24 hours, this poll out of Iowa making a lot of headlines. For a global audience, I think this is really important here. This is a poll. We've gotten plenty of polls, but this is a poll that's been right 4 out of 5 times in a major, what has been a major swing state. You're seeing that showing up in some of the betting, sorry, not the betting odds, but the way that the markets are betting on this in terms of the dollar, in terms of the Treasury yields. The chart on your screen right now showing that really in the last year or so, according to the Goldman Sachs policy indexes, you are actually seeing the Republican policy basket still outperforming.
Right, yeah, it's really interesting. So the dollar down, the yuan up, the VIX has been increasing. You're right that the Des Moines, Iowa poll certainly getting a lot of attention over the weekend. But uncertainty and reducing exposure and reducing risk in portfolios seems to be something coming through from a lot of the copy that colleagues have been writing or the guest notes we've had ahead of shows this week. I was drawn to some comments from Calvin Yo, Blue Edge Advisors, who said November the 5th is going to be a blindfolded mud wrestle in a minefield, which I think sets us up for something that is just impossible to call right now, and many investors fully aware of their limitations in that.
So investors being the operative word there. If you want to invest in this, it's very hard. If you want to bet on it, great, you can go and do that. But it is a coin toss, it seems, at the moment, and really hard to call. Volatility seems like the only kind of trade that people are willing to put on at the moment. It's interesting to see Bitcoin fading a little bit as well. That seems to have been something of an indicator of Trump's ability to win this election. But it's impossible to get a kind of sense of what is going to happen here. And we may not get that sense for days still to come.
We should make the point as well that on the Bitcoin front, Kamala Harris has done quite a bit to try to kind of seduce that crowd, and it has not paid off at all. So Bitcoin's going to be a really fascinating one to watch.
Absolutely. So we'll wait to see what the result is. And crucially, as you point out, both of you, when we get that result, that's going to be such a huge uncertainty hanging over markets, how quickly or not that result materialises. Oil in focus this morning. We're up by 1.8% on the Brent price, 74.42. And there's a couple of factors in play here. OPEC Plus delaying the return of some of their output. They've been scheduled to do that for December, and it looks as if they're not going to do it for another month. Had intended to increase by 180,000 barrels per day. But there are other things we're watching here. Middle East tensions, of course, and we heard from the supreme leader in Iran what he is threatening against Israel. Crushing response is the language he used, followed up with the Wall Street Journal story that's tried to add some timings to what that might look like. So we're certainly watching that. But oil volatility is near a one-year high, and it's not just those two factors we watch. We watch the US election. We watch what China is doing. We watch all the developments on the Chinese political front.
It's interesting. It does seem to have been a very fundamental story, though, oil, weirdly. The geopolitics has moved oil around a little bit, but the fundamentals have always come back and asserted themselves. OPEC was meant to be raising capacity in October. Then it was pushed to December. Now it's being pushed into next year. This is a fundamental story about what the supply and demand balance looks like. They can't deliver what they'd hoped to deliver.
I think it's fascinating, though, is that we keep talking about the geopolitical premium and the OPEC premium kind of built into it. And there doesn't seem to be that one built to the upside as much. But the downside, when we talk about ceasefire talks, when it's a little bit more plausible, that's when you see 5-6% moves in oil to the downside, which really speaks to that volatility point that you were mentioning, Anna. I'm curious to see how much of oil is actually tradable on the U.S. election. I'm not even sure if it is.
Yeah, we're going to have a really interesting conversation, though, about the way that the different candidates differ on their stance around energy markets. Now, one sector, of course, that follows what happens with oil prices very closely, aviation, Guy.
Yeah, here in Europe, we hedge it a lot. Certainly the airlines here in Europe make sure that they are much more hedged on the oil fronts than their US counterparts. But we've got some news out this morning, got some news out from Wiz, but the main area of news coming this morning is from Ryanair, cutting capacity next year in terms of cutting the number of passengers and things it will carry next year by around 5 million. This is basically down to the fact that they use Boeing aircraft, and there aren't any Boeing aircraft, and there's a strike taking place. But that strike may come to an end tonight. The union has endorsed the latest deal. It looks like it is going to be a very close vote, but it looks like increasingly as there is some fatigue. What is interesting here is I was just talking to Neil Sorahan on the way out. He is the CFO at Ryanair. He says that even if the vote is clear this evening, i.e. tomorrow morning, we'll get the result, you probably won't see Boeing back to full capacity until early on next year. This is going to be a story that is going to continue well into next year in terms of the impact it has, not only on the aviation sector, but also on the US economy. This is a big exporter, the biggest exporter for the US. So it's going to be an effect coming through for a while.
And we certainly saw that part of the conversation on Friday when we got the payrolls number, heavily affected by strikes and by hurricanes, of course. Yeah, really interesting to think about where this Boeing story goes. And you mentioned the union bosses backing it. I mean, they backed one before, didn't they? One of the offers before. But the language this time around does seem to be pretty strong. Union bosses saying in every negotiation and strike, there is a point where, and suggesting, you know, this is the time to say yes to this one.
The fact that we're actually seeing Ryanair talk about such substantial cuts, specifically in the UK, is not a ripple effect that I necessarily saw coming.
That's not a Boeing effect, though.
I see.
That's an APD effect. So the UK has raised the tax on flying, and they are pushing back against that. Michael O'Leary, MOL, has been very vociferous in the language that he's been using around the fact that the UK has been raising taxes on flying. He wants the UK to lower those to stimulate demand. The UK is going in the exact opposite direction. He's saying that will affect potentially the middle of the UK, potentially Scotland, in terms of the capacity they put on next year, which is going to be limited. So where they put that capacity is going to be really interesting, because they're going to have too many airports and not enough aircraft. So the UK could suffer as a result of that.
Yeah, assuming they get the ones from Boeing.
Well, yeah, they're going to get some, but they're not going to have as many as they thought. So they'll have more operating bases potentially they could go to. So where do you remove some of that limitation? OK, let's talk about what we've got coming up in the rest of the show. Very shortly, Frederick Repton, Senior Portfolio Manager at Neuberger Berman, is going to be joining us. We'll talk about the fixed income trade into the US election. Nancy Curtin, CIO at Alti Tiedeman, Global, is going to be joining us around the open. Plus, Anne-Sophie Corbeau, Global Research Scholar at the Centre for Global Energy Policy, the Central on Global Energy Policy, it says in front of me. I'm pretty sure that's correct. And former head of gas analysis at BP is going to be joining us, Kriti, a little bit later on.
Yeah, it's going to be a really interesting election conversation, I imagine, kind of throughout every conversation that we have throughout the program. There's plenty of other stuff happening this week as well, because, yes, the U.S. election is on Tuesday, but, of course, we may not get the results until as late as this weekend. So there is a little bit of other things to keep an eye on, including, by the way, plenty of central bank decisions around the world. The BOE, the Federal Reserve, is going to be hitting the wire as well. How much of the election narrative is going to be baked into that as opposed to the fundamentals? I imagine Chair Powell will get some questions on it. It's certainly going to be something we're going to be thinking about quite heavily. Plus, plenty of earnings results on both sides of the Atlantic. Novo Nordisk, as well as ARM and Qualcomm, will be, of course, something that we cover as well. Plus, China. This isn't something we talk about that often in terms of something to watch in an election week, but it very well could be, with the NPC convening today all week long. Yeah,
this takes all week, doesn't it? And the question that hangs over this is what resources are available? We've heard some of the policy direction, but there's not necessarily a great deal of clarity as to the actual amount of money that is on the table here for local government debt restructuring, for housing market, for bank capital, for supporting domestic demand. The last one, of course, crucial for many European businesses.
Absolutely. But it now looks like most of this is going to fall into next year. This isn't a this year's story now. No. This is a next year story. And how long does it actually take to start having an impact as well, I think, is an open question as well. So there's a lot to be decided, but the impact of it could take quite some time. And it'll be interesting to see the outcome of the US election and that and how that ultimately determines how much stimulus the Chinese are prepared to put into their market. If Trump wins, are they going to see more stimulus being put in because they feel that they need to drive up demand domestically to counter some of the trade and tariffs that potentially they could be facing as a result of a Trump presidency?
Yeah, absolutely. Their currency, one of those on the move this morning as we see some of those dollar bets being unwound. Interesting to watch those central banks, of course, as you say, Kriti, not just the Fed. More than a third of the global economy this week will give us their decisions around interest rates. 25 basis points cuts seen, of course, at the Fed. So the question there will be what happens in December, whether we get any clues on that. The Bank of England is really interesting then after the budget, because after the budget, the market reacted aggressively to the OBR numbers out, predicting more inflation, suggesting we'll get fewer cuts from the Bank of England. We talked about that a lot last week. And Reeves out over the weekend talking about holding back, being tougher when it comes to public sector pay, and, you know, a sense that perhaps that's the message that the market would like to hear right now. Maybe that's why we're getting those kind of messages from number 11.
Well, that's the inflationary aspect of all of this. How big an impact will the pay rises that have been dished out thus far, how big an impact will they have? I'm really fascinated to compare and contrast the OBR forecast and the Bank of England forecast and see how different they are in terms of their outlooks, whether or not the concerns around the OBR forecast and some of the errors that have been made there are going to be consistent with what we're seeing from the Bank of England. I'm not saying the Bank of England is going to be putting errors in there, but I think you'll get a sense of how important those errors are in terms of the forecasting that we're going to be seeing.
We'll have to see how this all shakes out with the markets as well, especially this week is crucial because last week we saw so much volatility in the gilt market and it was all over that. But you made a crucial point last week, which is that so much of how the gilt market now kind of acts after the budget will be as a function of what happens at the Federal Reserve. 12,000 and that payroll number, I mean, I think we all expected it would be an anomaly, but to 12,000 is wild.
Who knows? Honestly, I just think we knew this with these numbers are going to be all over the place. They are all over the place. Yeah. And I don't know what the revisions are going to look like. The revisions have been substantial recently. Talk about forecasting errors. Really difficult to judge at the moment what this data are telling us.
Yeah, once again, you've got a data print that you can sort of paint any story onto, I suppose, depending on how much emphasis you put on the strikes and the hurricanes and all of the one-off factors. Interesting that yields, Treasuries are open now, aren't they? Since the top of this hour, they were closed through the Asia session, no trading in Tokyo. And we see those yields coming down a little, Kriti, after we've talked about, you know, a lot of yield rise as Trump trades essentially were priced into markets over recent weeks.
Yeah, it absolutely is. We'll have to see how that all shakes out right now. We're looking at 416 on the 2-year, 431 we'll call it on the 10-year at the moment. But a pretty kind of, it feels like almost steep decline that we're seeing in the yields picture. We'll see how that shakes out. A lot of that, by the way, in function perhaps to the polling that we got over the weekend.
Iowa certainly potentially having a big impact here. And maybe that is what's being reflected. Yeah, 4.3. That's the US 10-year right now, down 7 basis points this morning. That's a pretty decent move. What else do you need to know this Monday morning? Let me run through the details. The office of Israel's Prime Minister is being accused of leaking classified documents to foil a ceasefire in Gaza. A judge says 4 people, including a Netanyahu spokesperson, have been arrested and accused of removing sensitive IDF intelligence. Netanyahu's rejected the probe as a, quote, deep state witch hunt to discredit him. Spain's King Felipe was hit with mud and insults during a visit to the flood-hit Valencia region. The Prime Minister, Pedro Sanchez, was rushed away by security, but the King stayed to speak to a group of protesters. Anger is growing over the government's handling of the flash floods, which have now killed at least 211 people. Spain's government is deploying 10,000 military and security personnel to the region. And NVIDIA is set to replace Intel in the Dow Jones average before the US market open on Friday. The change reflects the boom in AI and a major shift in the chips industry. NVIDIA's market cap has grown to more than $3.3 trillion. I'm not a big fan of the average. Who cares?
It's been said. Yeah, well, we've been there.
People who want exposure to NVIDIA through an index care. Suddenly they've just made the Dow far more relevant.
It's not an index, it's an average.
I can't have this argument with you right now.
Oh, yeah, we can do that in the break. I'm so glad we've added another reason to argue about the usefulness of the Dow. Coming up on the programme, Warren Buffett cuts his Apple stake further, while Berkshire Hathaway's cash pile continues to grow. We will dig into the details of the company's latest earnings. Plus, Ryanair is seeing a Boeing impact, as we've been discussing, while striking workers at the plane maker are set to vote on the latest offer from the embattled, from management. Up next, markets have a lot to ponder this week between US US elections and central bank decisions. We will discuss the impact of all of that. How is the market positioned as we go into this incredibly consequential week? If you have any questions, if you want to be part of these conversations with our guests, then please do get in touch. IB plus BBTV Go is the function to use on your Bloomberg terminal. This is Bloomberg. Welcome back to the opening trade, 7:18 this Monday morning here in London. Now, with the polls giving no clear indication of who will win the US election tomorrow, some investors are pairing the so-called Trump trades. Let's see what evidence we have of that. Bloomberg's Valerie Teitel is here to explain. Valerie, good morning.
Anna, we're getting a glimpse of a kind of price action maybe we can expect on election night. We're seeing quite a reversal in those favored Trump trades. We're seeing U.S. 10-year yields with a big rally this morning, nearly 8 basis points. The Bloomberg Dollar Index is soft, down half of 1%. And we're seeing underperformance in small caps. These are all things that were favored under the Trump win that we saw priced in the latest weeks. We're seeing that a bit reversed. I want to delve in deeper to the currency picture, though, because we've seen those currencies that are more exposed to tariffs being the ones on the board this morning. Dollar Mex, the Mexican peso, has been strengthening versus the dollar that is known as an economy that is very much exposed to these Trump tariffs. And dollar CNH. CNH is strengthening by 0.5% to the U.S. dollar. It doesn't seem like a lot, but it is a managed currency. So this is its 5th biggest move in the last 12 months. So keep an eye how that trades. I also want to note just how the betting markets have flipped into favor of Harris. We did have that poll out from Iowa on Saturday, and it seems since then Harris has taken over Trump in the betting markets. Anna.
Thank you very much. Thanks, Valerie. Valerie Teitel with the latest on the Trump trades.
So what is happening this morning, I think, is a really interesting question. Are we seeing the 10-year reacting to what we got on Friday night? Nobody could really figure out what was happening with the payroll number. A lot of volatility around that. Or is it a reversal of the Trump trade? I don't know. It's really hard to call. Probably a little bit of everything into the mix this morning. Frederick Repton, Senior Portfolio Manager at Neuberger Berman, joining us around the table this morning. What do you think?
Well, interestingly enough, yields sold off into the close in the U.S. on Friday. So part of what we're seeing is just a reversal of the price action that we had on Friday that, to your point, was hard to explain. Right? Was it due to the fact that the unemployment rate actually looked pretty good, whereas the payrolls were weak and market participants were preparing? Because let's remind ourselves, it's not only the U.S. election, there are so many other things going on this week. Today is 3-year supply from the U.S., on election day is 10s, and the day after election is 30s. And we're also getting 10-year supply from the UK on election day, which will be very interesting to see how market participants take that. So there's a lot to discount here for market participants. But if you look at the Wellington Open, it's quite clear. Polls have tightened. To Valerie's point, betting markets have tightened, polls have tightened. It's really hard to tell. Right? It's on a knife edge. It's really hard to tell what's going on.
How much money do you think is on the table right now? Is money waiting to get invested after the election? How clear an indication do you think we need to see in terms of the outcome of the election before people actually start making serious investments around what the next 4 years is ultimately going to look like?
That's a really interesting point. And so if you look at the price action, you would suggest, well, maybe you don't need that much, right? But it also depends on positioning. However, if we take a step back and we say, well, in 2020, it took us 4 days to know exactly who was going to take it. We think it will take something like 2 or a little bit longer. But in terms of the different reactions of the asset classes, FX moves first. I think we saw that, to your point, in Wellington Open. FX can move first. Why is that? Because in FX, it matters more about who's going to take the presidency rather than the whole suite of government. And so, of course, if you have a Trump victory, then you have certain FX trades that would perform. But on the other hand, if you would a Harris victory, you have other ones. And particularly, the dollar would sell off in that scenario. And that's what we've been seeing on the Wellington Open, of course, as odds been tightening.
You mentioned the various currencies. Which one is top of mind for you? I think the easy ones we pick are, of course, the Mexican peso, the Chinese yuan, the Canadian dollar. Are there other ones specifically in Europe that are feeling that?
Well, of course. Like the euro in particular, right? The euro is probably the one where you can have the largest volume, and so it's going to be a decent mover. But if we look at it from a different perspective, so Trump victory, right? Small and open economies, the economies where import plus export over GDP is a high percentage, they would struggle in all likelihood under Trump, assuming he puts in the tariffs that he's been talking about, which is 60% on China and 10% on the rest of the world. So the Scandinavian currencies and also the Eastern European currencies. So you have Poland, Hungary, Czech Republic, probably more so Poland, would struggle in that scenario. That's roughly the playbook that we saw in 18 and 19, if we remember the weakness that actually pushed the ECB to go into negative rates as well as doing extensive QE. On the other hand, of course, if Harris wins, you're likely to see volatility coming down and risk premium being lowered. And so in that scenario, also if it's a split government, the Fed may not have to keep monetary policy as restrictive. And so in that case, we think carry would come into play. So to your point, Mexican peso, there's also risk premium with regards to trade tensions and the upcoming renegotiation of the USMCA there. But also the Brazilian real could be very attractive, right? These currencies are the ones that have been selling off significantly and offer a lot of carry.
The renegotiation of the USMCA is fascinating because Trump, of course, created that renegotiation from the NAFTA as well. Talk to us a little bit about parity and the likelihood of parity when it comes to euro-dollar in a Trump 2.0. Is that something we have to revisit?
I do think so, eventually, right? And of course, there's a lot of caveats here. But of course, in a Trump victory, assuming that it becomes a sweep, then of course he's got a lot of executive power also on the fiscal side and on the trade side. And so you have a double whammy for Europe, where the US economy is performing really well, and we could talk about UX exceptionalism well. And of course in Europe we have our own issues, as we know, with France. It looks like Italian growth is now slowing down a little bit. Spain is the shining light in Europe, but all the other economies are struggling. And if growth then slows down, you get issues also on the budget side, right? France would be in trouble. Even Germany, assuming that the debt brake stays, it would be challenging. And it may take quite some time before the fiscal buffers then start moving forward for growth for Europe.
So that's the European story, and the election in focus very much this week. We also have the Fed, of course, and we have the Bank of England with a rate decision and some other rate decisions happening. Focusing in on the Bank of England because of the gilt market moves that we saw last week. We've had this news over the weekend. Rachel Reeves saying there's going to be more discipline around public sector pay, which is an interesting line to drop into the conversation at this point. But what we really, I suppose, want to hear as well is what the Bank of England thinks will happen from here, given what we heard from the OBR. The OBR now assumes there will be fewer cuts from the BOE because of inflation. Yeah,
so really good point, right? And so let's remind ourselves that the OBR forecasts are not the same as the Bank of England forecasts. They have independent forecasts. And so one of the things that we'll be looking into is the multiplier that the OBR has, which adds 0.65 percentage points to 25-26 growth. Is that really the same for the Bank of England? Had it not been for the budget, we would have thought the Bank of England would be reasonably pleased with what they've achieved here. Services inflation is coming down. It's at 4.9% now, lowest for quite some time. Headline CPI is below target. Core has been lowered. So this is good progress. And I think
that was the thing we heard most recently from Bailey, was about more cuts.
Indeed.
Not fewer.
Well, we do think the forecasts are going to be conducive for a slightly lower path for rates, which stands, of course, in contrast to what we've been seeing in terms of market reaction here. And so it's going to be a critical week. And also that supply that we're seeing the day after election, very important. But we had expected the government to come out and give us some tidbits in terms of fiscal sustainability here and responsiveness. Yes, absolutely. We got a bit of that at the weekend. Interesting the timing of this week as well, the fact that we're going to get Bank of England and then Fed as opposed to the usual order of things. Frederick, thank you very much. Frederick Repton, Senior Portfolio Manager at Neuberger Berman, with us this morning to preview a really busy week ahead. Coming up, Berkshire Hathaway's cash pile reaches a new record as Warren Buffett continued to refrain from major acquisitions. We'll get the latest on the world's most famous investor next. This is Bloomberg.
30 minutes until the start of equity trading here in Europe, 30 minutes to the start of the opening trade. The fireworks come in many ways tomorrow. It is the 5th of November. It is the US election. It is election eve today. US futures at the moment not giving us a clear indication. The actions in the bond market this morning, European futures this morning not giving us a clear indication. I think probably the equity market may sit on its hands for the next few days. The bond market, though, is doing something interesting this morning. It's being led out of the United States. As you can see, you've got European bond markets moving a little bit this morning, but the US 10-year, which has just opened because Japan has been closed today, is basically reversing the move we saw late Friday. So we are seeing a big bid into the US bond market this morning. And we're basically kind of where we were pre-payrolls, which is really interesting, Kriti. The market seems to be basically now ignoring that number and looking ahead to the election.
Yeah, we got to keep an eye on the ripple effect, though. When you look at a bond market move like that, does it show up in the currency picture, which we're already seeing that dollar weakness story? Does it show up in the oil picture as well? Remember, the inflation trade is still very much on, linking commodities to the bond market. Let's go to that commodity story now. Oil advancing this morning after OPEC Plus agreed to push back its December production increase by 1 month as tensions escalated again in the Middle East. Bloomberg's Jumana Bersachi joins us now from the world's largest energy event, ADIPEC. Jumana, what did we learn from the OPEC Plus decision? Walk us through the thinking there.
Yeah, well, Guy just talked about fireworks on Bonfire Day tomorrow, November the 5th. It's certainly been quite a few fireworks at the start of this ADIPEC conference. With that decision that came through late last night from OPEC Plus to delay the decision to put back 180,000 barrels per day from December onwards just by 1 month. So enough of a technical decision here to provide a little bit of support to the market. But as we have been talking about the last couple of months, plenty of concern from industry leaders, from OPEC Plus, about the state of global demand here, particularly some of the signs coming through from China, in addition to the growth of non-OPEC Plus supply. We had a nice chart on the terminal just a couple of weeks ago showing that the growth in U.S. production has basically fully compensated for the reduction in production that has come through from OPEC. And so that has to be really playing on the group's demand forecast and supply forecast when they look out into the future ahead. But today specifically, we are seeing about not just on back of OPEC Plus decision, geopolitical considerations back at the forefront again. Over the course of the weekend, we got some commentary from Iranian leadership, the Ayatollah suggesting that Iran would actually consider a response to the Israeli missile attack that happened a week ago. Initially, right after the attack, they were sort of moderated. They didn't really say a lot the first couple of days, muted in their response. But that changed, it seems, over the course of the weekend, perhaps because some of the hardliners within the leadership of Iran are now pushing for a more forceful response. So keep an eye as well on the geopolitical backdrop as we head into what could be a very important conference for the energy complex.
Jumana, you're in the perfect place then to understand how those in the energy markets are going into the US election, how they're feeling about Chinese demand, what they make of the latest moves from OPEC Plus. What are you hearing there at ADIPEC?
Yeah, well, certainly U.S. elections is a big elephant in the room. We just had the opening panel over here. A couple of questions were put forward about how the region would respond to either Harris or Trump win. They dodged the questions, I've got to say, pretty diplomatically. But certainly there is concern about how much production is still yet to come in the U.S. And not just production, it's also technologies, the advanced technologies. Shale drilling has really transformed the space over the last couple of years. But I thought it was also interesting to see how some of the themes have evolved from a couple of years ago. A few years ago, we were talking about the energy trilemma, that is gaining access to energy that is affordable, sustainable, but also equitable. That was the big theme the last couple of years. Now, there's talk about the rise of the global south and the energy demands that those necessitate. Also, a very big theme this year has been the rise of data centers and what that means in terms of the demand for energy going forwards. And just to give you some numbers that came out from that opening speech by His Excellency Sultan Al-Jaber, he's saying over the next 6 years, data centers will more than double, requiring at least 150 gigawatts of installed capacity by 2030 and double that again by 2040. Their premise is that you need to be investing in all forms of energy. Hydrocarbons, per the official commentary, will continue to be part of solution, but then so will renewables and so will nuclear, which is a part of energy that the UAE themselves have been investing heavily in as well. But data centers and AI, obviously, as AI is everywhere, a big theme this year at the ADIPEC conference.
Yep, continues to be a topic of conversation in many geographies. Thanks so much, Jumana, Bloomberg's Jumana Basetchi with the latest from ADIPEC. We have another conversation on energy policy, but through the lens of the US election coming up later in the programme. We'll speak to Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy and, crucially, former head of gas analysis at BP.
OK, let's turn to another company that's firmly in focus this morning. Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. The conglomerate also cut its stake in Apple again, this time by around a quarter. For more, let's bring in Bloomberg's Charlie Wells. Buffett's selling Apple, but why?
I mean, look, so there's kind of two ways you could read this. You could read this the interesting, spicy way, which is that maybe Buffett has some questions about Apple. He's never been a really big tech guy. Apple has had, a slightly difficult year. They've had some slowdowns in China, of course. The flip side of this, and I think probably the more realistic read, is that their equity exposure on Apple was huge. And so they had to kind of trim that down.
This is a portfolio effect story.
This is a portfolio effect story and also a tax story as well. I think there are concerns from Buffett about tax raises in the future, so selling now could potentially head off some of those hits.
Well, walk us through some of the other bets, perhaps, that Warren Buffett has been making. He's a value investor, which originally, when he took this Apple stake, people were like, wait, what's going on? But he kind of made the case that Apple is a value stock. If not Apple, then what? Yeah,
I think interesting Apple, a value investment, also a consumer company as well, right? I think Buffett loves a consumer company, and that iPhone there really is the consumer there play. I think, interestingly enough, we've been seeing over the course of this year and in that third quarter, also him cutting some Bank of America stakes as well. So that was one that really played off well for Berkshire, but that they have been exiting. And now, of course, that they're under that 10% ownership of the bank, they don't have to report their moves quite so frequently. So that should benefit Berkshire as well.
And what do we read into the fact that they can't seem to find places to park the cash right now, or they just don't want to put that money to work?
Yeah, so they were net sellers of equity, and they parked those proceeds into short-term T-bills. And there's this sense that there's just nothing out there to buy. But, Buffett himself said at the annual meeting earlier this year that that's fine. He's okay to wait. They want to look for, low-risk investments that could also make them a lot of money. They don't see a lot of those out there right now. I think something striking about this third quarter, Anna, as well, is that usually in this kind of environment, Berkshire will repurchase their shares. But they didn't do that this quarter, and that's the first time.
This is the biggest and most interesting kind of tell on what his thinking looks like at the moment. If you think your own stock potentially is overvalued, it's gone up actually in the interim period. But if you think your own stock is overvalued, that tells you so much about his perception of what he thinks the wider stock market is. If you can't even buy your own stock, why are you going to buy anybody else's?
No, that's a good point. I mean, everything's too expensive. And, unlike a lot of other financial firms, that permanent capital means they can just sit around and wait.
Can we talk about the other factor here, which is that Berkshire Hathaway is a major insurer and that we aren't actually seeing that much strength in their insurance business, despite, I should say, strikes, hurricanes that, of course, hit the payrolls numbers. How is it hitting Berkshire?
Yeah, Kriti, it's so important that you brought that up because actually in the third quarter, their earnings from insurance underwriting were down 70%. And you've got to think about hurricanes here, right? Hurricane Helene hit in the third quarter, and that was a headwind for them. The company also said that Hurricane Milton, which clocked over into that fourth quarter, that's going to have a hit going forward. Yeah.
No, it's fascinating. I mean, we talk about the insurance business. Berkshire does so many different things. They're an investor, they're an insurer, they are a real estate. They have a real estate company, Geico. Not to mention, we could go on and on. Bloomberg's Charlie Wells, of course, standing by with all of the insight there. Again, it's fascinating to me, at least what Berkshire picks, because his bets on Newmont, his bets on gold are also something that come up fairly often. So if you're talking about this risk-off strategy and going to gold, the Newmont bid is also one to keep an eye on.
I'm in danger of mixing up the timeframes here, I'm sure, but really interesting to see whether, he's got a lot of cash there, and he's sitting on a lot of cash. I mean, we've got a big event taking place this week, the election. I wonder if he's leaving himself in a position to take action based on what he thinks the next 5 years of US politics are going to look like.
He is looking for better valuations, though. Ultimately, he wants to see a better entry point, and clearly he is not finding that at the moment. He's selling out of a number of major positions, which I think is interesting. He's not buying back his own stock. He's sitting on a lot of cash, despite the fact that cash is potentially going to be yielding less and less going forward from here as well. So it's going to be interesting to see what is the trigger, as you say, for Buffett to get back involved. how big a valuation drop do we need to see in order for him to take action?
Is political clarity enough, or does everything just have to be cheaper?
Well, the other thing we have to keep an eye on is we talk about Apple and how kind of big of a deal it was that they even invested in Apple in the first place. I'd be curious to see when he says NVIDIA is then a value stock, because he has had kind of a love-hate relationship with Intel as well as a major kind of bet on chips. If you're saying that chips are the new oil hedge or a value pick, when does it show up in the likes of NVIDIA, which, by the way, is now a Dow component, or will be in a week?
She likes to mention that just before a break, just when we don't have time to explore it in any great detail. Guy, maybe that's
Nobody
good.
Cares.
Maybe no one wants to hear that conversation. Coming up on the programme, we take a look at Ryanair after the airline cut its passenger growth target amid Boeing jet delays. A very clear link between the two there. We will focus in on what Ryanair has said this morning. That's next. And other stocks to watch. This is Bloomberg.
15 minutes to the opening trade here in Europe. It is going to be an incredibly busy week. We've got so much on deck, so much potential for volatility this week. The election absolutely front and centre as well. There's plenty of other things going on as well. So let's find out what's catching Kriti's eye this morning. Over to you.
Well, of course, everything U.S. election related is going to be catching my eye. But I think what's really crucial here is how the markets are interpreting this ahead of the U.S. election. Of course, you look at some of the asset prices that are moving this morning, the dollar, Bitcoin, maybe even Treasury yields, if you're willing to go there. You would say that perhaps there is a little bit of concern around the Iowa poll. But take a step back here. This is a really interesting benchmark that I like to look at. These are the Goldman election baskets, basically looking at, of course, what a Republican policy basket looks like and a Democratic policy basket. The Democratic one in the white line, the blue line is, of course, going to be the Republican one. This is crucial in that right now what you are actually seeing is outperformance when it comes to the stock market in the Republican basket. That's this blue line right here. It is starting to turn, but it is outperforming. And it's not specific to a Trump trade. It's really talking about a red sweep. And that's where the market is looking like, at least from a stock market perspective, really placing their odds. Go back in history, though, and you can see how volatile this term has been. You can actually see this idea that back in the pivot points of this chart was the Trump assassination attempt, a boost for the Republican kind of bets there. You can also see this move down here from when Kamala Harris took over from Joe Biden in terms of Democratic national ticket is what I'm going to try to say. A bump there for the Democratic basket all the way into the debate that you saw over a month ago already again. But then a real pivot point, a real turnaround as, again, Anna, a guy that comes down not just to who's in the Oval Office, but who makes up Congress. And that's where that red sweep bet is really showing up.
Let us move this conversation on then, Kriti, and with that in mind, put that in a wider market context. Let's talk about the markets in 3 minutes. Our Markets Live executive editor, Mark Cudmore, with us with thoughts ahead of the US election and beyond. Mark, good morning. So, Kriti, they're talking about how we're seeing evidence in markets of changing expectations around whether we get a Trump presidency and also whether we get some kind of red sweep in Washington. Do you see those trades evidenced in the market? I mean, the dollar seems like the obvious one.
Yeah, very much so. That's the dynamic here, though. I think it reflects a lot more about kind of position pairing because of the uncertainty rather than a real change of expectations. Talking to endless traders over this weekend, I was away on holiday last week. I've come back and tried to poll as many people as possible what their kind of expectation is. Most people are positioned for a Trump victory, but very tentatively positioned for it. So there tends to be a bias in the market, and we've seen that as positioning in the last few weeks, that Trump is likely to win. But people acknowledge that polls seem to be second-guessing themselves. There's much more questioning of whether they've potentially overcompensated or undercompensated for problems in getting the correct polling sample in the last two elections. And because of that, people do not have high risk exposure and do not want high risk exposure going to the election. So I think the dynamic that we've seen over the last couple of sessions is more about just paring back a bit of risk rather than suddenly swiveling to think that Harris has a much greater chance.
When do we start to see the big direction? What will it take? How high is the bar? When are these investors going to be looking to deploy money into the market? I'm really curious about how they see this week evolving.
I think that for all the hedge fund guys, they're going to be acting about lunchtime Wednesday. By about 9:30 p.m. Eastern Time, 10:30 a.m. Hong Kong, Singapore time, we'll get enough input from key swing states to know whether the polling adjustments have undercorrected, overcorrected, or whether they're in line. And that means the people with the most accurate models by around that time on Wednesday should have, that's 9:30 p.m. Eastern Time Tuesday, 10:30 a.m. Wednesday in Hong Kong, will know roughly whether their models are correct or they can adjust them and have a good confidence in the result. And there's an expectation from many people in the market that unless it is truly very close, that we'll know which way the result's going to be by lunchtime Wednesday in Asia. That does not mean the official result gets announced then. Remember, 4 years ago, we all knew what was going to happen again by about Wednesday afternoon in Asia, but the official result didn't come through for a few days later. So I think from that moment onwards, we'll start seeing traders react. I think that the conviction is around Trump trades. And that's because Trump is a change of the status quo, much more so than Kamala Harris, who is obviously Vice President of the current administration. So that's where the much more aggressive action will happen, that if Trump wins, people really, really want to buy the dollar. That is seen as the cleanest trade apart from crypto. I think dollar yen, dollar MEX, dollar CNH will react really, really aggressively on Wednesday if Trump looks like he's winning, which we should know either way by Wednesday lunchtime.
And dollar CAD, of course, is also another one we're going to keep our eye on. Bloomberg Markets Live executive editor Mark Cudmore joining us this morning. Get more up-to-date analysis from him and the team. Just type in MLIV GO on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch from Joe Easton. Joe.
Morning, Kriti. So Ryanair is downgrading its forecast for passenger growth for the year ahead, citing these strikes over at Boeing and the impact on the deliveries. Here's the key quote from the statement here, saying the outlook is highly dependent on Boeing ending the strike sooner than later and also production ramping up more quickly than is currently priced in, according to the company there. Now, the other thing to note is Ryanair has already been hit this year by a decline in fares. The CEO has warned of a reduction in airline fares, and that has seen the stock dropping. It was trading close to €22 earlier in the year and then went below 14, now at about 18. And as we will also be aware of, is the rising oil price hitting the costs in terms of reducing those margins further. That could also be an impact for the company. But for the moment, it is these Boeing strikes that are hitting the company's passenger numbers. In terms of oil, though, we will bear in mind we have seen oil rising overnight, given the outlook over in the Middle East and also the supply cut potential for OPEC as well. So we could see a feed through into the airline stocks today and also into the energy stocks as well. There's the move in the crude prices on the screen. Then if we take a look at the oil market in terms of the stocks, we can see that these share prices have actually been underperforming over the past year to date, given analysts downgrading their forecast for oil prices, but that could potentially see a bit of a retracement of that move today. Then in terms of chip makers, we've got our eye on ST Micro, one of Europe's largest chip companies, has its only downgrade to sell. This is over at Morgan Stanley. Now, Morgan Stanley is citing weakness in the auto sector, so chips supplied into the auto space with a huge price target downgrade, going from €35 down to €20 on this stock, saying that automotive growth is the key challenge for that company. As we can see, only one sell at the moment, 17 buys on that one. That could potentially be a weak spot for the chips today. Then in terms of your other analyst ratings, there's a couple in the UK to bring you this morning. So Stanchart comes down to neutral at Goldman. That's after a big rally following results last week. Likewise, NatWest, this one, though, raised to outperform following their results, which were pretty much better than expected. And we also had the UK budget out of the way as a kind of clearing event for that one. And finally, Fraser's in retail raised to outperform. We had some headlines around Boohoo on that one last week. All of those in the UK could be in focus this morning.
Thank you, Joe. Our equities reporter, Joe Easton, with some of the stocks in focus this morning. We'll add to that list the Burberry share price and with it the Moncler share price. We're seeing other media specifically around the luxury goods sector reporting that there could be some interest from Moncler in Burberry if the two of them got together to create some sort of outdoor specialist. There's not Bloomberg reporting, but we're seeing it being picked up by a number of brokers as something that might move these shares.
So everybody's been waiting to see what's going to happen with Burberry. Would it be a takeout target at some point? Is there going to be some M&A around this stock? But it's interesting. So you have Burberry, Moncler, who just took a stake in Moncler out of interest. I just wonder if we can draw a line between Bernard Arnault and Burberry at some point.
I don't know. I feel like the messaging is so different, though, from Bernard Arnault versus what Burberry's trying to do. Isn't Burberry trying to reach a more mass audience, a la American? Is that really Bernard Arnault's style? I don't know.
I don't know. At some price, maybe.
Maybe, yeah.
But it'd be interesting. Trench coats, Moncler coats.
Yeah,
I guess there's some logic that
the
would
outerwear
fit together,
story, isn't it? Another stock we'll keep in focus. Then we have Schneider Electric in focus, replacing their CEO, and there's been the suggestion this morning that could go weaker at the start of trade as well. They've said in a statement that the board decided to appoint company veteran Olivier Blum, who's been with the business for decades, to replace Peter Herwick at the company. So a company that's very much at the focus of a lot of things that are changing in the global economy right now, and there with a new CEO.
It feels like the board doesn't feel that he was going fast enough, and that's why Blum's been brought in. Basically, there's a sense that maybe this is a company, particularly with the AI trade that is so strong around this company at the moment, that there's a need to accelerate that strategy and push harder. And there's key shortages within the electrical grid space at the moment. Schneider's right at the heart of this story as well.
Plus the fact they were hit by a penalty. The French Competition Authority hit them with a penalty, 207 million euros, and so that's seen as something that perhaps weighs on the business. But we go into a busy week then with lots of investors telling us they're sort of lightening up on positioning because it's too much of a knife-edge call around the US election. I think the thing we've been exploring with guests that's really interesting this morning is, sure, what they expect to happen, but also the timing of when they expect things to happen. When will we know what? And Mark giving us his thoughts. He thinks lunchtime Asia, so what's that, 5 a.m. London time, maybe Wednesday. Will we know enough? Will investors know enough to start placing those trades?
Will they know enough, or are they just going to go long vol until the weekend, basically? I'm curious, in the absence of that kind of knowledge out of the U.S., does the China news then drive some of the news flow as well and maybe magnify it?
How much news are we going to get out of China, I think, is an open question, though. This is an event that goes on all week, the NPC, so we'll watch that very, very carefully. Number of stocks we've been flagging into the open. We'll deal with the details of those. The opening trade is coming up. Got around 5 minutes to go. This is what futures are looking like this morning. Fairly flat, but we'll get some details on the single stocks in a moment. This is Bloomberg. Monday morning, good morning. Couple of minutes to go until the opening trade here in Europe. Let's look at the legacy from Friday. European stocks, the white line, basically climbing into the close. Little fade just as we come through into the close here in Europe. Post payrolls, though, it's interesting. We get an afternoon fade in the US. US markets finished just higher, but there was a definite fade that needs to be priced in this morning. Maybe that's why we're seeing what we're seeing in futures, Kriti.
Well, the risk-off sentiment is quite clear from the bond market to the equity market. You're certainly seeing that here in Europe as well. This idea here that CAC 40 futures are down about 0.3%. It is your underperformer in the futures trade this morning, Anna. But the FTSE 100 also taking a beat lower, down about 0.2%. A similar story over in your stocks 50 futures. I think in anticipation of the U.S. election, it might be a micro day today.
Yeah, it might be. We'll certainly keep an eye on the energy sector. We have oil prices going higher today. But in terms of the individual stocks, let's have a look at some of the ones that Joe was talking about and throw in some others. Ryanair in focus, of course. We've heard from them the extent of the impact of the Boeing delivery delays. They've cut their passenger estimates for 2026. So that's going to be in focus for the aviation sector. We will also keep an eye on Burberry. Media within the luxury space talking about whether there might be the possibility of a Moncler offer coming through here. So we'll watch the Moncler share price. We'll watch the Burberry share price to see if there is any sense that these two businesses could get together to form some kind of outerwear business. Schneider Electric also in focus. Now, is this just about a different roadmap for the business, or is it to do with the price fixing that they were accused of? They've said they might appeal that particular decision, but the business was fined. And in the wake of that, just days later, they decided to change their CEO. We'll keep those in focus then, Guy.
Absolutely. Let's fold all of that into the market open. Here we go. It is time for the opening trade this Monday morning. It's Monday. We wait for Tuesday. We really wait for Wednesday, probably for clarity, maybe some clarity on the US election. So I don't expect we're going to see a significant shift in the outlook for Europe this morning. There is so much still to price in this week. Monday morning feels a little early to get involved, and as a result of which you're not really seeing much sense of direction, certainly at an index level. The FTSE 100 barely budging. The Stock 600 is down by less than 1/10 of 1%. The IBEX is down by 1/10 of 1%. We wait for the CAC. We wait for the DAX. We wait for the SMI this morning. The DAX down 0.1%. The CAC, as mentioned, maybe a little bit of softness there versus its peers, down by 0.3%. But there doesn't seem to, at an index level at least this morning, Kriti, to be a clear sense. Below the surface, maybe some single stocks.
A sector story for sure is emerging, and a lot of it's coming from this outperformance that you're seeing in the energy names, Anna. This idea from an index contribution, Shell, Total, BP, right at the top of the pack, right alongside the likes of Anglo American, by the way. To the downside, though, it looks like some of those healthcare pharmaceutical stocks that have been the outperformers lately are actually dragging the index down. The likes of Novo Nordisk, for example, among others. But right now, energy, commodities, very much in focus.
Yeah, energy, yes, absolutely. And Ryanair in focus. And, you know, there are a couple of reasons why things might be negative for the aviation sector. Not all of the airlines are negative today, but we do have Ryanair down by 1.4%. Some of the other travel and leisure-related stocks also following it down. Of course, we've had this update on what impact the Boeing delays will have here, but we also have the oil price moving a little bit higher, and sometimes that can be something that has some sort of impact. But that is one area of weakness. Personal consumer, discretionary, grocery stores, that's another area of weakness this morning. But some of that's a reversal from Friday. Reckitt Benckiser was a really strong performer on Friday. Today it's down by 1% and seems to be pulling that sector a little bit lower.
It does seem to be the energy stocks, though, as Kriti mentions, that is interesting. It'll be interesting to see whether this continues. The election can have a major impact on this space. And it was interesting that the US majors actually reported softer numbers. There's been this big kind of concern around the discount the European majors trade to their US peers. I wonder kind of what impact the US election could have on all of that. In terms of other areas that we are watching, it's interesting to see real estate softening up a little bit this morning. In terms of some of the other names, are we seeing a movement in Burberry yet? I throw the hospital pass to Anna.
Stand by. I don't think so. No, I don't think we've got that one open just yet. Not trading yet. So we watch with interest there. And Moncler, of course, the other side of that that news story.
Vestas is up, which is interesting. Which I think the offshore wind, we're going to talk about this a little bit later on. Vestas is going to be potentially one of those stocks that could be firmly in focus. Yeah. Because Trump has indicated very strongly that he's not in favour of offshore wind.
Yeah, it's certainly something that has been, and you've seen this shown up in the likes of some of the renewable stocks. But he is in favor of solar, which is interesting. So if you really go into the nitty-gritty of some of the renewable story, there seems to be this kind of election bet emerging between solar versus wind. And again, something that we will be discussing throughout the rest of the show. But again, it comes right back to, in the meantime, while we await those election results, we are going to kind of see what investors are supposed to do. In that meantime, we've got the perfect guest.
Yeah, let's have that conversation. Nancy Curtin joins us, CIO at Alti Tiedeman Global. Nancy, so nice to have you here with us.
Good to be here.
In such a consequential week.
Big week ahead.
It is a big week ahead. How do you set up for this big week ahead? We were just talking to one of our guests in the last hour who was talking about the number of people, you know, the number of investors who are sort of reducing their exposure to the extent that that is at all possible to the results of the US election. How are you approaching this week?
So first of all, we say to our clients, you need to be long-term investors. We would not position ahead of this type of event, although it is going to have an impact on markets. And frankly, it's impossible to call. This is a photo finish, as we know, and it's not just about who wins the presidency. It's also about what happens in Congress as well. And I would say those are really very hard to call at the moment. So trying to position ahead feels a bit like fool's errand, but it's not what we do. We stay, with a client's strategic asset allocation. And frankly, both candidates are pro-growth. So let's just put that in context as we look ahead to 2025.
Okay, so can you see a way that either of these candidates can be good for risk assets?
Well, look, Kamala Harris is more of the same. Is that a bad thing? I mean, the U.S. economy seems to be doing pretty well. Take out the funky little jobs number last week, but, we had some hurricanes and some other things affecting that. But that seems to be pretty good. I would like that one. That's not going to be bad at all. And of course, Trump, I think most people think he will try to extend the tax cuts and, lower corporate tax rates, which might be a bit of a heroin boost near term to the market. But let's face it, we also have to keep an eye on the long end of the bond market in the United States. The fiscal situation is rather challenging. And so Harris stands for less of fiscal imprudence, so to speak. So, you know, I think neither of them are particularly bad. Both are pro-growth. And I wouldn't say that only Trump is going to be good for the markets. Don't forget, the status quo is not so bad at the moment.
It's not so bad at the moment, but you mentioned that pro-growth policy, and critics of that argument would say that a lot of that comes right down to tax cuts and this idea that Trump is talking about these major tax cuts, which would then, to balance the fiscal issues, be offset by the tariff story. The tax cuts or the tax increases under Kamala Harris are, by a lot of Wall Street and a lot of corporate players, thought of as anti-growth. What would you say to that?
Well, first of all, are the tariff increases really going to fund those tax cuts? Sure. I mean, I think that's a bit voodoo economics. But anyway, I think what we have to recognize is dependent upon the composition of Congress, right? And even it looks at the moment like the Republicans will take the Senate. House still remains a bit of a big question mark. But it's not clear to us that either are going to have a significant majority. And remember, Congress doesn't always just vote along partisan lines. And so without a significant majority, maybe some of these things that we talked about, other than the tariffs, which can happen by presidential decree, may not get through to the extent to the rate, et cetera. Remember, there have been a lot of campaign promises over the last couple of weeks. They continue to multiply.
So let's talk about, aside from the presidency, let's talk about the Congress and the split there as well. What would be the first agenda item, do you think, on the congressional space? We're here in Europe. We talk a lot about that defense spending story. Come January 20th, which, by the way, is 10 days after we hit the budget, what's the first thing on Congress's agenda?
I think Congress has to look at the fiscal rectitude of the United States, or lack thereof. Remember, even putting aside what Harris and Trump could put into place, we've got fiscal deficits of more than 6% as far as the eye can see. You've got an aging demographic in the United States, increasing costs for Social Security and health care, not to mention you saw that interest cost number, $1 trillion in the deficit that was announced at the end of September. So I think Congress recognizes both sides that this is a problem and they need to deal with it.
So you made the key point when you came on here that you are, of course, a long-term investor, but between the kind of inauguration of the president and of course, the congressional kind of buildup that follows, there's a meeting in December when it comes to kind of appropriations and where some of that congressional budget spending goes. And I'm curious, as we kind of wait for that lame duck period, how much of that might change things for an investor that may be more short-term?
I think that's very hard to call. It's going to be a barn fight. The whole debt and deficit situation is a barn fight. And as I said, not all of Congress votes along partisan lines. So I think we have to wait and see how that turns out. It's going to be a lot more protracted, I think, than people think. But the key thing for us is to see what kind of fiscal rectitude, as opposed to just spending, gets applied. And by the way, the so-called bond market vigilantes, wherever they've been, are likely to come out if there's a lot of spending increases and we don't get past the debt ceiling, which will come again, as you kind of alluded to, in January. So these are risks ahead. But broadly, in our view, we think growth in the United States is good. We are overweight equities. We think that's still the place to be. There's a lot of more attractively priced stocks, not just in the U.S. large cap that we've positioned in, but also diversification. Key message for clients, make sure you're diversified. And we've got other things in the portfolio that serve as a ballast as well to equities.
So the U.S. continues to outperform the rest of the world. Is that true for the next 4 years?
I don't think so. So, first of all, I mean, the U.S., there's a lot of strength and resilience there, a lot of good things happening, really. The consumer's pretty strong, sits on a huge amount of home equity wealth, et cetera. But I think what's really interesting, we're in a global synchronized easing cycle. Let's not forget that. Bank of England likely to cut on Thursday. We've got ECB will cut probably in December. We've got no lack than 10 emerging market economies that have cut interest rates. We've got fiscal and monetary stimulus coming from China. May not be enough. I don't know. We have to wait and see how that turns out. But the point is, global synchronized easing cycles should help global growth, and that should help the global
And the Fed's
economy.
included in that.
What's that?
The Fed's included
and the
in
Fed, of course, is good. We do think the Fed will probably cut this Thursday.
Okay. And then?
That remains. I think they will be data dependent, and they will come out this Thursday, which we expect probably will cut, and talk about the fact that we will continue to watch the data ahead. Remember, they're looking at the neutral rate. Now, whether the neutral rate is 2.9 or 3.2 or it remains to be seen. We're on a policy normalization path because as inflation's come down, real rates have gone up, which is a form of effective tightening. So we do think they need to bring rates down.
And what do you look at in Europe then, Nancy? We've talked a lot about the United States, and clearly a lot of the vulnerability around the election, if there is some, might fall elsewhere rather than on the United States. So are there stocks and sectors that you're actively avoiding right now with the election in mind, or no? Long-term investors don't need to think that way?
Long-term investors, you know, emphasizing companies with great moats and great cash flow. That is the way to do it longer term. But I do think that Europe needs a growth strategy. Draghi talked about that. From a macro perspective, Europe really does need a boost. But at the end of the day, Europe has always been a stock picker's market, and there are some great companies in Europe. There are not so good companies as well, like every other market. And so it's about really finding those quality companies, good competitive moats, etc. You're confident you can find them when Warren Buffett says he can't? Well, Warren Buffett got a little long on his skis there in his Apple holding. But, you know, at the end of the day, we could easily have some turmoil here. We could have some volatility in markets. You know, before last week, we were up, what was it, 6 weeks in a row. This is not normal. You're happy with valuations, though, where they are at the moment? Happy. Now, the U.S. is expensive, right? I mean, let's not pretend it's not expensive. But I think a couple of things. You know, the so-called Magnificent Seven traded 30 times earnings on average. The rest of the market, 16.9, 15% discount to its long-term average. So let's just bifurcate what's going on here. And the Magnificent Seven, that makes them vulnerable to disappointment. And we saw some disappointments in the recent earnings. The rest of the stock markets in the world, not so expensive. Mid-cap, actually, we think is attractively priced in the States. So you've got to pick your spots. But no, the U.S. market as a whole is expensive. But remember, profitability in the last decade and return on equity has dramatically increased in the States. I'm not going to bang the table here and say we pay anything. But I think that's important to consider as well. Very nice to see you, Nancy. Thanks for dropping by to see us. Nancy Curtin, CIO at Alti, Tiedeman Global. Thank you very much. OK, the Core 6 looks like this morning. Schneider's certainly firmly in focus. Changing of CEOs at Schneider, generating a 1% move to the downside. But that looks pretty much in line with some of the other stocks we're seeing across Europe as well. So you've got Novo, which reports numbers later on this week, soft as well. In fact, everything is soft. Luxury actually looks like it's holding up, despite actually what is happening in China and maybe the anticipation that we don't get that much stimulus delivered this week. Yeah, we'll certainly keep an eye on all those developments out of China this week. Let's focus in on some of the other stocks that are on the move this morning and picking up on some of the luxury clothing themes, perhaps. Here's Joe Easton.
So staying in luxury, we are actually seeing Burberry, the best performing stock in Europe today on the stock 600, up around 4.5% at the moment, was up around 7% at the open. Now, there is a report in the financial and luxury blogging website called a Miss Tweed, which I wasn't aware of before today. I'm told I should be aware of that website, but that is reporting that potentially Moncler is looking at the UK company Burberry Moncler over in Italy. Now, remember, LVMH's boss recently invested in Moncler, and the report says that he would be in favour of such a deal. It is getting some attention this morning. We're seeing again, as I say, the best performer in Europe at the moment. In terms of going the other way, though, Ryanair is coming down now. They've downgraded their guidance for passenger growth. That's actually falling more than it was at the open, now down 3% for Ryanair. Now, the interesting thing to note is that this downgrade to passenger growth could potentially actually be supportive of pricing, according to analysts. So that actually might take the sting out of that move. But at the moment, we are seeing a pretty steep decline, down 3% for Ryanair at the moment. The other thing for the airlines, as we mentioned earlier, though, is the oil price. That is rising, potentially adding to those losses for Ryanair. And then here we've got the move higher in Shell and Total, with crude futures up around 2% overnight. So all of that playing into the same kind of theme at the moment. Then in terms of Schneider, Guy was running through that one a moment ago. A surprise change in CEO. Now, the CEO has only been in the role for around 18 months. So that is a bit of a shock for the market, potentially related to the strategy, but also some of those legal things that were mentioned earlier in the show as well. So that one coming down very slightly this morning. And then over in mining, we've got some deal news on Anglo offloading a third of a company over in Australia, according to a statement. It's worth around $1 billion, so it's pretty sizable, selling that for the company listed in London. We're seeing that stock gaining 1.5% at the moment for that one. Then in terms of the morning calls, some really interesting ones, and the Morgan Stanley downgrade is having an effect on ST Micro. They're the only broker recommending selling ST Micro, and the price target change was what stood out. They were at €35 on Friday, they're now at 20, so even more downside expected for a stock that has declined a lot due to the declining automotive demand, and that is what they're citing for that move. And then finally, Anna did mention Reckitt earlier, so we're going to look at that one because they've got a downgrade today. This one is over at Bernstein. Now, you remember on Friday, Reckitt had a big rally following news on the baby formula litigation, some positive update. But analysts at Bernstein are saying that that move is now overdone, so they recommend you come down on your holding in that one. And Reckitt falling 1.2% today in London.
Joe, thank you very much. Joe Eason from our equities team with some of the stocks that are on the move and some of the sectors. And my eye goes this morning to the technology sector, which is by far and away the worst performing sector here in Europe today. And that downgrade that Joe was talking about to one particular stock, ST Micro, could be part of the reason. But it's not limited to that. We see others within the space under pressure, not by much, but down 1% or 2%. As we go into this consequential week, consequential for so many reasons, the US election first among them, interest rate decisions, but also some of the earnings stories that we're going to get out of tech. How will the sector continue to defend the sort of price to perfection valuations?
The ST Micro story is fascinating as well, just given that it had like a 35% drop or something. I think was it 2 weeks ago? I think over in the U.S. So there's that volatility story, which is exactly what tech is not supposed to be or has not traditionally been going into election week. It's been that safe haven, and right now it just isn't. Is it
the value trade? Is it that kind of a trade still? It's interesting to see the volatility seems to be increasing around this space at the moment, which I think is interesting. So BE Semi's down 2.2, STM's down 1.85, ASMI down 1.58. These are they're not huge moves, but they are decent moves for a sector that has been really positive for quite some time. But what you're also, I think, beginning to really see is the differentiation within this space. Yes,
it's those companies that are really exposed to AI and those companies that are just really exposed to the troubles in the auto sector. You know, and those two are very different business cases, very different stories, and we'll see those continue to play out in the tech space.
You see, you got Volvo Cars this morning, I think, reporting some really weak numbers out of China once again. Again, that connection between those two, I think, absolutely fascinating.
Yeah. It absolutely is. I should mention, since you mentioned Volvo Cars, we should mention that the entire Stockholm, the Swedish index, by the way, is outperforming the rest of Europe. I'm not super sure what's driving it at the moment. It seems like a mix of factors. You've got the likes of Swedbank among like the Volvo and others trading higher. But again, outperforming the rest of the market by quite a little bit. We're going to dive into some of the other equity stories we've got our eye on in just a few minutes. Coming up on the program, Ryanair cutting its passenger outlook and it's blaming Boeing. We're going to bring you some of our interview with CFO Neil Sorahan. That coming up next. This is Bloomberg.
21 minutes into the session, this is what European stocks look like. We are going nowhere in a hurry. There's a few anomalies here and there in terms of the single stock stories that we're watching. But basically, I think this is a macro story, an election story, a later on this week story. But there are, as I say, some single stocks that are definitely worth focusing on this morning. Ryanair is one of those. Europe's largest low-cost carrier. Shares down this morning. The carrier cutting its passenger growth target for next year. The group's CFO, Neil Sorahan, speaking to Tom McKenzie a little earlier on. This is what he had to say about the outlook.
We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer of 2025. We're now planning on the basis, as you said, of 210 million passengers instead of 215. We had the situation this summer and last summer where we were overcrewed, we were overscheduled, and we just don't want to be there again. So even if we do get some more aircraft, we'll use those as operational spares. So I'm hopeful rather than confident that I'll see those aircraft coming in. And as I said, we're now planning on the lower growth.
So you're planning, to be clear, you're planning on 10 fewer aircraft than you'd expected for that peak summer season next year. What does it mean for fares and pricing? Because fares have come down, what, 7% in the most recent quarter?
Yeah,
Do you see further softness in fares? fares to bring customers in?
In fairness, I think the declines are moderating. Bookings are strong into Q3. We think fares will be still modestly down. We're still more cautious on Q3, but I think it's in a better place than it was. We had the impact in Q1 of the absence of Easter. The consumers have been dealing with higher interest rates for longer. They're starting to unwind in Europe now at this point in time. Consumer seems to be a bit more confident. Capacity is definitely constrained. We just talked about Boeing there. Airbus are having problems getting aircraft out the door as well with the Pratt & Whitney engine issue. We're seeing consolidation playing out with ITA and Lufthansa, and TAP is going to go up for sale. So I think capacity is going to be constrained for some time, which would indicate that potentially more risk to the upside than the downside on pricing.
CFO at Ryanair, Neil Sorahan, talking to Tom McKenzie a little bit earlier on this morning after they posted numbers and downgraded the outlook for next year. Let's get a sense of kind of how the various pieces of this story fit together. Global aviation reporter Sid Phillip joining us around the table. Sid, Ryanair's blaming Boeing effectively. They're not getting the aircraft they want, therefore they are not going to be able to carry the passengers that they expected to be able to carry next year. Is that reasonable? Is Ryanair's finger pointing at Boeing justified this morning?
It is to a large extent because Boeing is the only sole aircraft supplier to Ryanair. Ryanair is a all 737 operator. And so for them to be able to sort of offer the capacity they need to offer, they need to get the planes that they've ordered. And that's not really coming in at the moment because of Boeing's various issues.
In terms of therefore, the supply-demand dynamic, at the moment what they're basically saying is we're not going to get the aircraft that we want, but fares are soft. So I would have thought that if we're not going to get the aircraft that we want, the fares would be firmer because there wouldn't be the capacity. The capacity is not there to kind of reduce fares. So explain the issue with we're not getting the aircraft we want, but fares are still soft. That doesn't seem to fit together logically to me.
It doesn't. And also, remember, you're going to a slow season right now because, winter is typically a slower season. So airlines have to typically spur fares in order to get people on there. So they need to offer discounts, they need to sort of cut fares. And, Ryanair has seen a slow summer this year. The summer has been much worse than they had seen previously, and that's because airlines are struggling to see people have struggled with the whole cost of living, and they've basically decided not to go on holiday instead of paying astronomical fares. And so the airlines have seen that, and they've had to cut fares accordingly. At the same time, Ryanair gets its they sort of spur demand. They offer services to places that other airlines don't really fly to, and they sort of get demand that way. So for them, it is a bit of push and pull, but analysts are hoping that given the fact that there's fewer aircraft, yields will be higher.
That was going to be my question, actually. If they do cut those flights, who's benefiting, if anyone?
It will be the airlines will benefit from it. If there's fewer flights, there will be much higher fares, and that's sort of the demand and supply equation, and that's what analysts are hoping for. That while Ryanair sort of cuts back its passenger forecast, they will be able to sort of increase fares and be able to sort of get more profitability.
Sid, what do we make of the comments around the budget? O'Leary never holds back on these things. We called it idiotic, I think. It doesn't like the increase in passenger duty, which you can understand, but then when you look at the size of that increase, maybe not that big on some of the low-cost fares?
Given the fact that low-cost carriers tend to offer rock-bottom fares, the impact could be much higher on Ryanair versus British Airways or others who have much higher fares. And so this is a £2 per passenger on short-haul fares, and that can potentially put off someone who is looking to buy tickets for a family of 3 or 4.
30 seconds. Are Boeing workers going back to work tomorrow?
That's the billion-dollar question. Everyone wants to know what happens next.
Yeah.
The unions recommended the workers take the deal because of the fact that they said that there may be a worse deal at the end of this, so they asked the workers to take it, 38%. So let's see what happens tonight.
Okay, Sid, we'll watch. We'll have that result kind of first thing tomorrow morning. We'll be able to price that in as well. Plenty more coming up. European equities kind of marking time at the moment ahead of the US election.
This is the opening trade. We're about 30 minutes into today's session. Seeing some green on the screen when it comes to the equity market. Also seeing green on the screen when it comes to the commodity space. And this is interesting here. We're, of course, digesting two very different lines of news over the weekend. The idea that Iran has now formally said that it is going to talk about a more complex attack on Israel. That, of course, boosting prices, in addition to the fact that OPEC Plus has said they are not going to be increasing their production, at least in the near term. So we're keeping an eye on that. Both of that creating a little bit of a tailwind into the oil story. Brent crude at just shy of a 75 handle, NYMEX just shy of a 72 handle there. I want to take a deeper look into energy policy, this time through the lens of the upcoming U.S. election. How could the potential policy pivots from Kamala Harris or Donald Trump impact Europe? It's part of a broader series that we're doing, of course. We're joined now by Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy and former head of gas analysis over at BP. Anne-Sophie, a pleasure to have you on the program. Thank you so much for joining us. Let's start with the oil story here, and then I want to get your views on natural gas as well. We are talking a lot about oil in particular, some of the moves that we're seeing in this market really being cushioned by the fact that so much of the excess supply in this market is being provided by the United States, which has now grown to become the #1 producer of the world, or exporter of the world as well. Talk to us a little bit about how that may or may not continue under a new president.
I think, in fact, this is very interesting because oil and gas are going to be mostly shaped by market forces. And I don't think whether this is Mr. Trump or Mrs. Harris who is becoming president is going to have a major impact on oil and gas supply. It may be different indeed when we are talking about U.S. demand for oil and U.S. demand for natural gas, because Mrs. Harris may have a more strict environmental policy, which would lead to a decline in U.S. oil demand and U.S. gas demand eventually. But in terms of supply, I don't think there is going to be that much of a difference, maybe with one exception, which is on methane emission, where I do expect Mrs. Harris to be a little bit more strict because, you know, the U.S. has entered into the global methane pledge in 2021, and this is very much something that Mrs. Harris is seen as continuing. But when we are looking at the situation in the Middle East right now, I mean, things are evolving very rapidly. So whoever is going to be president may have a totally different situation in January when they are entering into office. And this is very important to keep in mind. 2 months is a very long time in geopolitics.
It absolutely is. And Anne-Sophie, we're going to talk a little bit more about the geopolitics in just a moment, but I want to really zero in on that point you made about the nat gas story, simply because you made a key point that Ms. Harris, Kamala Harris, candidate Harris, may actually be following in line with some of the policies of Joe Biden, but that does include some of the concerns around pipelines, fracking, and of course the exports to Europe. And that's where a lot of my interest lies when it comes to a European audience, Anne-Sophie. This idea that so much of the export picture of United States LNG in the last 2 years, since the onset of the war in Ukraine, has been well received by Europe in the absence of getting that supply from Russia. And I'm curious, does that continue if some of Biden's policies are continued under Harris?
Okay, so let's put things back in context. The US is currently the largest LNG exporter, ahead of Qatar and Australia. It is going to remain so, and it is actually going to double LNG exports based on the facilities which are currently under construction. This is a fact. This is happening right now. Plaquemine, for example, in the United States, this is a new LNG facility, is starting. At the end of the year, we are going to have Corpus Christi. Golden Pass is potentially delayed to 2026, but we have a lot of LNG which is coming to the market. This is a fact. Now, what Mr. Biden has done, and which is referred as the LNG pause, is basically saying any additional project which is currently being reviewed by the Department of Energy, we stop because we need to do a full reassessment. Actually, I am pretty much in agreement with the fact that the Department of Energy needed to do a reassessment, especially on what is going to be the impact of this huge amount of LNG export on the domestic gas market, because the last thing that we want is to have US domestic gas prices rising. And I think this is also something that a US president wouldn't want to see happening. Also, we have a totally new framework with the fact that we have new regulation in terms of methane here in Europe, which is also going to be relevant for US LNG exports. So was the Department of Energy right in terms of doing this pause? Yes. Was it correct to make that as a big political statement and use that for the forthcoming elections? Probably not. But make no mistake, there is a lot of LNG which is coming to the market, not only from the US, but also from Qatar and from a lot of additional countries. By my calculation, we have about slightly less than 300 billion cubic meters of LNG capacity, which is coming to the market between 2024 and 2030. This is unprecedented. Now, whether US LNG comes to Europe, this depends on the prices. Because what happened in 2022 was economics 101. Prices were high, LNG came to Europe.
Okay. It sounds like what you're suggesting is that it's going to become a buyer's market within the gas space, which will be very good news for Europe. We now have, obviously, the gasification plants in place, maybe to actually take advantage of it. Is the US going to be a reliable partner, though, when it comes to gas supply? The Trump administration, where it's come into play, will be using all levers at its disposal, maybe to get the policy it wants to see out of Europe. Is gas going to be part of the mix?
Potentially, yes. But do remember that a lot of LNG is actually contracted by a lot of companies. They can be from Europe, they can be from Asia, they can be international companies. So this LNG is simply off-taken at the exit of the LNG plant, and then the off-takers are totally free to send it wherever they want. So again, this is economics 101. If the prices in Europe are indeed higher, then of course LNG off-takers are going to send it to Europe. If the prices are higher in Asia, then they are going to send it to Asia. So the beauty of the US LNG is indeed this flexibility. Actually, if I want to go back to history, you know, when the US and the European Commission had this agreement that a lot of LNG would be sent to Europe in order to help the European Commission and the European Union because of the drop in Russian gas supplies, then actually it was just realizing that yes, the LNG will go there, but the president doesn't have any power to dictate where LNG cargoes will go. It's not in his power. The power of the administration is to give the authorization or not to send to send the LNG to non-free trade agreement countries, and all European countries are free trade agreement countries. The only thing which may be controversial in Trump's point of view are the methane rules. I don't think he's going to be very happy with that. And indeed, that may be a problem eventually for Europe, but that would be after a Trump administration, because if Mr. Trump is saying don't care about methane, then there is no way that the US LNG is going to be ready in time for when the new rules are really kicking in 2027, and then especially in 2030. But that would be actually detrimental for US LNG exporters.
Yes. So, Anne-Sophie, you sound quite convinced that a Trump administration will not use LNG supplies as a tool of foreign policy. Is that's your advice to Europe?
Yes and no, because at the same time, I think Europe will be under pressure to sign long-term agreements. You know, in 2022, because I am from the Columbia University, but I am also based in Europe, I was receiving a lot of calls from people who wanted to build new US LNG export terminals and were wondering why are European users not signing some long-term contracts with US LNG plants. And the truth is, European off-takers, they are very hesitant because of the net zero commitments in Europe. And this is something that Trump doesn't like. I mean, he doesn't like, climate commitments. He doesn't like climate change because he thinks this is a hoax. So I think he would be putting pressure on individual countries, as he did during his previous presidency. Why don't you sign long-term contracts with the new projects that we are going to basically authorize? There are a lot of US LNG projects which are waiting for commercial agreements in order to take FID, and it would probably put individual pressure, probably on Germany, but also maybe on some countries in Eastern Europe, etc.
Okay, so that sounds quite transactional, something that maybe we've seen in the past and might see again. Talk to us about the policy, the big picture policy around climate change, Anne-Sophie, and what you would expect a Trump administration to mean for that? Because some people have pointed to the Inflation Reduction Act and the subsidies that are available to cleaner energy and said, well, actually, these are having a big positive impact in some red states, and as a result, Trump won't roll those back. Would that be your assumption?
Yes, partially. I agree that, well, first of all, maybe to put something in context, there is a presidential election and there is also what is happening with the Congress. A president is limited by who is in power at the Congress. If the Republicans are in power at the Congress, and on top of that we have Trump as a president, then he has much more power than if we have a divided Congress, for example. In terms of the Inflation Reduction Act, which is a law, it will be very difficult to repeal if he doesn't have control of the Congress. But also, as you mentioned, a lot of what Biden has done is actually benefiting some red states. So some senators have said very clearly, well, we don't want that to disappear because this is actually helping us a lot. So I think there will be probably some, it will make more difficult to spend what has not been spent yet. It would make, some consumer tax credit, maybe on EVs especially, more difficult to get. Yeah. There is also the hydrogen tax credits, which have to be finalized at the end of the year. We have been waiting for them already for more than 1 year. And I think in terms of everything which is about capture, carbon capture and storage, that will remain because Democrats are in favor, but the Republicans are as well, and the oil and gas industry is very much in favor of that. However, everything which is about 45V, which is benefiting renewable hydrogen, well, we may see some strange rules at the end of the year in terms of a Trump presidency.
Well, Anne-Sophie, a final question to you then when it comes to some of the other pieces of legislation that the Biden administration has put forward. I really want to come back to the nat gas pipeline story because this has been a major point of contention in the state of New York, for example, specifically around that pipeline infrastructure that's going to get built and then potentially help the United States export even more nat gas than they could. But those permits, as you rightly point out, have been paused. And I'm curious how much of that, if Kamala Harris is elected to the Oval Office, stays in play.
My thinking around the additional LNG export is that she is going to authorize, but potentially with strings attached. You have to go back 1 year ago, and what actually led to the pause was this report, which was preprint at that point, from Mr. Howard, that, US LNG is actually worse than coal. And this was a red light for a Biden administration, for Democrat administration, because until now, the thinking had been that US LNG was actually beneficial for the climate because it was displacing coal. So that report, because of the methane emission, was suddenly changing the whole picture. And when I'm saying strings attached, I think that there would be potentially more constraints in terms of the methane emission. So yes, you can export LNG, but the gas has to be cleaner, and on top of that, your facility has to be also lower emission. And we are seeing that already happening. When you are looking at some of the projects, some of them are planning to use cleaner electricity, others are planning to use CCS at the liquefaction, and some people are also starting to talk about certified natural gas.
Anne-Sophie, thank you very much for joining us. Good to get your perspective. Anne-Sophie Corbeau, global research scholar at the Columbia Center on Global Energy Policy. We thank you for your time. 8:44 here in London. Coming up, with the US-China trade war still in full swing, who would Beijing prefer to be in the White House? More on that next. We'll leave you with a reminder of what both Trump and Harris have had to say on trade relations between the two.
Tariff. 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 I am a tariff man. To me, the most beautiful word in the dictionary is tariff.
The Trump administration resulted in a trade deficit, one of the highest we've ever seen in the history of America. He invited trade wars.
I want to cut taxes on Americans while putting tariffs on China and foreign countries.
Focusing on relationships with our allies, focusing on investing in American-based technology.
Build your plant in the United States and you don't have any tariffs.
Welcome back to the opening trade, 48 minutes into the session, around just over 24 hours until the start of the US election process. I know it's been underway. People have been voting beforehand via the postal votes, but in-person voting kicks off kind of this time tomorrow, in a few hours' time. It's going to be an exciting 24, 48 hours. US markets are barely budging at the moment. European markets barely budging. The FTSE's outperforming a little bit right now. Shell, Astra and HSBC plus BP doing the heavy lifting. China relations obviously are going to be pivotal in all of this. Relations between China and the United States have faced multiple challenges in recent years. Both the Republicans and the Democrats, though, are signalling that they are going to take a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
Okay, it's going to be an interesting few days for China. It's going to be watching what is happening with the election. It is also going to be watching as well what is going to be happening with the NPC.
Yeah.
Which of those two factors are going to have a bigger impact on Chinese markets?
Yes,
I wonder.
In the short and in the long term, we asked that question. Really interesting, though, the analysis there from Stephen Engel, and sort of taking us back a little to the conversation we had around energy markets, that it's sometimes difficult to assess what Trump will be like in reality on any particular policy platform, because you have to separate some of the rhetoric from the transactional nature of the politics and the way it plays out or it has played out previously.
Yeah, and I think it's also fascinating that that package made a really key point that also our energy guest made as well, which is that policy might not actually change at all. So the status quo, which has already been an increased tariff picture, it may just be the status quo. How much more tariffs can you really add without congressional approval?
We don't know what the makeup of Congress is going to look like. We don't know what the White House is going to look like. We don't know at this point. And China doesn't know either. It can make calculations. But the other factors that are all in the mix here are what is happening with Ukraine, what is happening with North Korean troops, what impact is China having on that, how is that going to affect relations with you. There's so many other complicating factors in the mix here. The US election is just one other wild card.
Absolutely, and we will see how investors globally play all of those angles then on the election. As Kamala Harris and Donald Trump make their final case to voters, the finance industry is gaming out the implications of a historically close race that could dramatically swing policy. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter Valerie Titel with details. So how have investors been preparing then, Val? We've talked about this for a while. Some investors today saying they're trying to pare back exposure to the extent that's possible.
Look, for many funds out there, this has been a weeks-long, maybe months-long preparation of preparing models, just how the market reaction could be, and even running simulations with political consultants on, at what point could we get a big swing towards Harris and then a big swing back to Trump? Because that may be, for many out there, those dislocations may be where the value lies. Even some traders saying they're not really watching the presidential race. They're more focused on Congress, and their trading book is more attuned to swings Congress with the Republican sweep versus a divided Congress. But even if funds aren't positioned for an outcome, they're very much gearing to trade it, because remember, we could get a lot of information out during Asia markets, and Asia markets are known not to pick up on all the nuances of the U.S. political story. So there could be a lot of opportunity to put in trades if traders out there are nimble and they're getting ready for that kind of game plan.
How well staffed will the U.S. desks be?
A good point. We've been hearing from many saying that they prepare to do all-nighters, even some traders talking about how they're going to be taking cat naps on couches. J.P. Morgan plans to increase staffing in Europe and Asia in case there is a big surge in volume, and the U.S. desks need to be supported in other areas. Goldman is said to have hundreds of sales and trading teams on site in New York throughout the night. There's even one major central bank or one major investment bank saying that they're halting any technology updates during this week because they don't want any trading glitches happening during these volatile sessions.
It's going to be a really fascinating one, and also where are those glitches potentially happening in the currency market, the bond market. Remember what did take several, I think, current kind of limit up, limit downs when it comes to stock market trading the day after the election. At least that was the case in 2020. We're going to keep an eye on that, plus all the slew of earnings this week, and of course central bank decisions around the world. All of that is going to be covered throughout the week, but of course the U.S. election is going to be front of mind across the markets and across the policy. I'm sure plenty of European nations, government officials and investors alike, paying attention to it. Of course, it's European stocks pairing those early gains. That does it for the opening trade. This is Bloomberg.